Yes. So I want to understand how many of you have been trading in the market and how many of you are new. If you've been trading, could you quickly let me know how many years of trading experience have you got? Anurag is new. Oh, I read somebody says 20. Jignesh says 20 years. Wonderful, Jignesh. So you could actually train us. We could learn something from you. Dakshay says 5 years, FNO mostly, alright. And Praveen from 6 months. Anita, 3 years and investing for 10 years. Well, that's wonderful. So in that case, I think most of you will be familiar with candlesticks and swing highs and swing lows that we discussed yesterday. Am I right? Okay, that's good. Dakshay has replied yes. So we don't have anyone who's completely new. There was somebody. Yeah, Vishal is completely new. Anurag and Vishal. Okay. All right. Anyone from Bangalore here? Okay, Dakshay, I guess you're from Bangalore. All right. Okay, so, oh, Dakshay from Mumbai. Right. Anurag, Vellore, Vishal Singh, Chennai. Praveen is from Chandigarh. Anita says All India presence. Yeah, exactly. Ultimately, all from Mumbai, India. Yeah. Okay, that's wonderful. So let's start the session now. Since we have some very experienced traders here, can you help me understand what support and resistance is? So to form a support, how do we form a support? What are we looking for? How many points are required to make a support? Yes, that's right, Anita. Thank you. We need 2 points to make a support. All right, guys. Since we have already running behind schedule, we'll be going a little fast today. Since we need to finish session 1 and session 2, we have only 2 hours, right? So I don't want to eat up into tomorrow's time. All right. So now any price level, for those of you who are new, like you can see this example, this is your first swing, so we mark this as 1, and then this is the second time market makes a swing low at the same price as the previous one. All right. So since it made a swing low at the same price, we connect these points, and this becomes our support. Now we call this support because price has bounced off 2 times from this area. That's first and then twice. All right. So if it comes back here for the 3rd time and then you see a hammer, what would you do? Would you buy or would you sell or would you stay out of the market? Okay, Dakshay, Praveen. Okay, most of you say buy. That's right. So we would buy because we expect the price to go up from here. Exactly. Right, so that's what a support does. It's any price level from where you can expect the stock to go up, and it would face, so like the definition says here, a price level where buying is strong enough to stop or reverse a downtrend. So we have a downtrend and price hits the support, from there it goes back up. That's what a support is. Now the reverse of that is called a resistance, which is any price level from where you can see the price not going to go up further. Alright. So the simple rule that you have to keep in mind is you always buy at the support and always sell at the resistance. So which means that price goes up, makes a swing high. Now it goes up and makes a swing high the second time around the same level. So this price becomes resistance, which is basically any level where the stock is not able to breach that level. So that becomes your resistance. Now third time if it goes up, you are expecting it to come back down. Now does that mean that it'll always come down from the resistance? No? Okay, so what else can happen? Can it break the resistance? Yes, that's right. It can break it. It's called a breakout. Exactly. So now when it breaks out, when are we supposed to buy? Alright. So I'll mark these points. One is, this is one, when when it crossed the resistance. Here is two. Okay. So let's say it goes up here, comes back, and then goes up. So this is point number 2. This is point number 3. And this is point number 4. Now, which is the best price to buy? 1, 2, 3 or 4? Anita says 4, Dakshay also says 4, Anurag says 3, Praveen says 4, Vishal 3, Nageshwar 4. Okay, well that's mixed opinion. So, okay, in terms of making the maximum amount of profit, which should be the best entry? 3, right? Exactly. So we would be looking to understand how we can get an entry at this level, all right? Because here market has broken this, so we know it's going up. Now this is called the pullback. Okay, you must have seen that in the previous slides. Okay, you can see here. So this retracement, this is called a correction. It's also called a pullback. So we want to always buy at the pullback. So what we do is we look for a candlestick pattern, and once you have a candlestick pattern like a hammer after this minor downtrend, you decide to go ahead and buy. All right. So that's how this works. So how this would be is, let's say it goes up from here and then comes back to this level. Now that's our support, and from here it starts going back up. So that's twice. The third time once it comes, you could go ahead and buy. Now you always wait for candlestick confirmation. So which are the two patterns that you have learned yesterday for reversal? Dakshay says hammer. Yes, that's right. One is hammer. Other one is shooting star. Okay. Yes. So hammer and shooting star. That's right. Apart from that, one is hammer and shooting star. Engulfing. Exactly. So you have engulfing. Engulfing is bullish and bearish. So bullish engulfing is after which trend? So if we have this trend here, now here you'll be looking for bullish engulfing or bearish engulfing. Yes, that's right. So after an uptrend, you always have a bearish engulfing, and after downtrend, you have a bullish engulfing. Okay, clear? Everyone knows what support resistance is. Should we go ahead and look for an example quickly? Right. So this is Axis Bank, and what Axis Bank is doing is, you can see. Okay, now let's say we want to draw support resistance lines. Where would we make it? Can we make it here? This is a swing low and this is a swing low. So that's the support. We connect this because they are 2 points. Is that correct? Yes. Thank you, Anurag, Anita. Alright, so what we're going to do is we'll make lines at every swing low. Alright. And then we'll try to learn how to make a support. Oh, sorry, the last line was quite bad. Okay. Alright, so now we've marked all the swing lows and we've got horizontal points. What we're trying to do here is we're trying to identify how to make a support. You can now see this. This is your point number 1 and then this is your point number 2. Right? So we've marked this support area by this line. And as we go forward, price comes back to this level. Alright? So it comes back and touches. Now, basis on what you see here, would you buy, would you sell, or would you stay out of the market? And Anurag says buy. So can you tell me why would you buy? What's the reason that you want to buy here? Wonderful. Thank you, Anita. Bullish engulfing, and it's at the support. Exactly. That's our reason for buying. So we have this bullish engulfing over here, and it is also at the support. So if you have a candlestick pattern at a support, which is indicating that the downtrend is going to turn to an uptrend, you decide to go ahead and buy. That's how supports work. Okay. Any doubts, guys? Now you can see price has actually moved up from the support and gone all the way up. Okay, Nageshwar says, please explain once again for me. Sure, Nageshwar, no problem. Where to buy? Okay, we'll discuss that. So we have these 2 points. We connect these 2 lows. This swing low. Are you all clear? This is the swing low. This is the first swing low. That's the second swing low. And we connect these with a horizontal line, right? That is our support line. Now price comes back down, and here you can see this green candle. This is a bullish engulfing, alright? So here you have a downtrend. Akshay says it's not a complete engulfing. Yes, exactly. So the point is, we're not very strict in terms of definition. We are looking more in terms of what really happened. So since we had a candle opening gapping up, and the body is bigger than the first candle body, we're still allowing it to be accepted as a bullish engulfing. So we don't go with the textbook definition because we are mostly looking for signals as to what's happening at a support area. So it's more about the investor psychology. Alright, so okay, now we have this, Nageshwar, we have this bullish engulfing over here, alright. We have this price as the support, and at the support, after the downtrend, you have bullish engulfing. Now since we learned yesterday, engulfing is a reversal pattern. So it will reverse a downtrend to an uptrend, alright. Now because of that, we decide to buy. When will we buy? After this candle is closed. So this is the price at which we would buy. Is that clear to everyone? The entry price? Okay, thank you. So moving on. Alright, now price rises up from here. Now let's look at why. Okay, I have some more questions for you now. So what I've done here is, this is my swing low and there's the next swing low, and I have connected this with this horizontal line. Alright, now let's see what happens next. Okay, price comes back at this same level. Now what would you do here? After this candle is closed, would you buy, would you sell, or would you stay out of the market? Anurag and Anita says buy. Daksha and Praveen also would buy. Okay, why would you buy? What's the reason? Same reason, bullish engulfing. Yeah, that's correct. And apart from that, the red candle also has a slight rejection. It has a tail as well. Plus you have a bullish engulfing here. So yeah, slight hammer, exactly. So we have a rejection on the first day, and then we have market moving up, bullish engulfing. So here we decide to go ahead and buy, and this is also our support, right? So this is how you trade support and resistance. and then as you can see, price did go up from here. Okay, now here what should you do? This is the same thing. We have the swing high, the second swing high, and on the third day, right, we would sell. Why would we sell? What's the confirmation here? Resistance, okay, and yes, Anita's got it. It's bearish engulfing over here. Yes, Akshay, Dakshay also said the same thing. So we have bearish engulfing, so we decide to go ahead and short. And price actually came down from here. Okay, so I think you kind of getting the concept of support and resistance. Now let's look at how a support or a resistance is formed. Alright, now can you tell me after this, so this was a swing low, then price went up, came back down, and then here it has this green candle, alright. So at this price, do you think there would be some people who would be bullish? So there must be buyers, yes? Yeah, because of this pattern, some people would have thought that it is going to go up. So some people will be buying. Now, do you also feel that there must be a certain set of people who feel that this trend which has fallen with this gap will actually, this is a correction and this will actually continue to fall? Is that possible? There must be some sellers at this level also. Yes or no? Okay, so now we have sellers and buyers. And okay, Anita says no. So Anita, do you think that all the people who are trading would be only buying? Okay, Anurag said I didn't get that. See, my question is, after seeing this candle on this day, okay, so if you can see that this is a bullish candle. Now here, we will obviously have buyers who are bullish in the market, who feel that price will go up. So a certain set of people would be buying. What about the rest? Would everyone, 100% of the market would be buying, or is there a possibility that there will be a certain percentage of people who would be selling, thinking that price can continue to go down? Is that right? Anita, do you agree with me? I'm not saying majority. I'm saying even if it's a minority, but there must be some people who are bearish. Alright, so most of you agree with me. If you don't, you could type out a no and we could discuss that. So this is fundamental. So we need to understand the logic behind this. At any price, you always have three types of people. One is the buyers, people who feel it will go up. One is the sellers, people feel who will go down. See, everyone does not know technical analysis, guys. Everyone does not know candlesticks. There will be some people in the market who have seen that for the last couple of weeks, price has been falling and it has stopped falling and now it should fall further, right? Everyone does not know technical analysis. There must be some people who are doing fundamental and maybe on that basis they are bearish. So we have bullish traders and bearish traders at this price level. Yes, that's right, law of ignorance. Now, there is also a possibility that there are some people who do not have a trade, who are waiting for some confirmation before they take a trade. Is that correct? So that's why at any price level, there are three types of traders. Alright. Now let's see what happens next. So what we are understanding is how do support and resistances work. Now let's say for some reason price from here came down but started going back up. At this point, what are the emotions of the buyers, the sellers, and the people who stayed out of the market? The buyers would be happy. The reason being that they made a profit. Alright, so they have a big smile and they're happy. Bears, would they also be happy? People who sold? The people who sold would not be happy because they are losing money. And what about these guys? People who are sitting on the side? Okay, they don't have a trade, so they are happy because they're not losing money at the end of the day, right? Now, the people who are buying, if the price comes down, what would they do? Would they buy more? Yes, and what about people who are selling? If the price comes down, is that a possibility that they will exit their trade, close their position? And people who have not bought at all, what would they do when price comes back down? Let's say if this is the support and now again price comes down. So at this level, buyers would be buying more, bears would be closing their position, so that means they will be even in effect adding to the buys, and people who are sitting out will decide to finally get into the trade. All right. When that happens, there will be a lot of buying happening at that support and price will actually start going up. That's how a support is formed. So let's look at exactly how this happened. Now here you can see for some reason price actually came back down. At this juncture, everyone decides to jump in. The buyers, the sellers exit their trades and people on the side also decide to buy. Because of that, you can see price starting to rally upwards or start shooting up. Alright. So this is how a support or a resistance is formed. Is that clear to everyone? Yes, Praveen said yes, that's wonderful. Alright, so support and resistance are basically psychological levels and this is the story that goes on behind forming a particular level as a support and resistance. Okay, now moving on to trend line. Before moving on to trend line, can you quickly give me a rating on a scale of 1 to 10 on your understanding of support and resistance? Anita, Praveen, Dakshay, Anurag, all say 10. Okay, lovely. Jignesh is also 10. Great, that's awesome. Vishal Singh, 10. Nageshwar's 8. All right, little bit of practice. Okay, now let's talk about trend line. So when the price is moving like this, what you can do is you can make join all these swing lows and mark the support, and join all these swing highs and mark the resistance. All right, this is how you make support and resistance. What happens if price is moving like this, which is generally how the market trends? So now how would you make your support and resistance? Channel, yeah, okay. And so we connect these swing lows. When you see the market moving in a direction, in a trend, you connect the swing lows, and this line which connects the swing low, this line is called the trend line. So trend line is basically a vertical, or not really vertical, it's a diagonal support and resistance. That's called a trend line. Alright. In the same case, now if price breaks this, it can actually start its downtrend. Alright, let's see what I mean by this. So it's an extremely useful tool, identifies the current trend, which direction the market is actually going right now. It can give an early warning of current trend becoming neutral or reversing. So if you see that there's a trend line and price is moving on the trend line, but certain times it is starting to, in this area when it is breaking the trend line, then you know that the direction can actually change from up to down. Alright, so trend lines give you an early indication. How you make the trend, how many points do you need to make a trend line? Yeah, I know most of you have read it as 3, but just like we need 2 points to make a support, we need 2 points to make a trend line. 3 will be an add-on. So 3 points would be even stronger, but even with 2 points you can make a trend line. Okay, let's look at how that happens. Because if you take 3 points, you will not get time to trade. So we generally start trading on the third point. Right, so here we have this as a swing low. This is the second swing low. And we connect these points with this white line. Now here what happens? What would you do over here? Would you buy or sell or stay out? Yeah, Anurag says buy. Okay, everyone says buy. That's wonderful. So what's the reason? Engulfing or hammer? I mean, I don't see. Okay, in engulfing, it's more like a hammer, but we could debate on that. So you can see that rejection. Price has actually touched. Here it has gone up. It came back, touched the trend line, and from there it's got rejection because of this candle. Vishal says, what is a hammer? Vishal, were you present for yesterday's session? Oh, you were not present for yesterday's session. Okay, you'd have to watch our video because I would have taught you what the hammer is right now, but then I won't be able to finish our syllabus for today because we're already running behind. So just watch the video, and if you have any doubts, you could email me and we could clear that for you. Or probably tomorrow's session I'll take it up. Alright, hammer is basically a candle that looks like this. Alright. Okay, so that's what a trend line is. That's how trend line helps. Now here if you see that candle comes down and breaks this, then this same level which is acting as support over here and over here, this will start acting as resistance here. Alright. So it's basically a trend line. Trend line basically horizontal support which is become diagonal now. That becomes your trend line. Alright, so here on the third touch, we decide to take an entry. Alright, so that brings us to the end of session 1 and we will start the session 2 now. So before I start session 2, do you guys have any queries, any doubts? Praveen says no, okay. Alright, so let's quickly jump to the second session. Okay, Nageshwar has a doubt. Not all low swings are not considered for trendline Y. See, the point is you have to connect two swing lows. So if you have, let's say, a swing low here, then this should join. You can connect all swing lows, but you need two to join. So now this will go at a certain angle. So only the one which will come and touch here will be forming the trend line. You can connect any two swing lows to make a trend line. It doesn't have to be a particular one. Like any two swing lows will make a trend line. Okay, we'll see on charts. Alright, so let's say we connect this swing low and this swing low. Alright. So now I have my trend line. This is my swing low and this is the next swing low. And you can see after this price has been taking support of the trend line. Here what happens is it starts going below that and then it breaks the trend line. Once the trend line is broken, it acts as the resistance. Earlier the same trend line was acting as support, now this acts as a resistance. Okay, then we had another trend line somewhere here. Okay, so you can see in this particular candle it broke the trend line. So here where it was acting as a support all this while, here it started acting as a resistance. Alright, so this is how a trend line is made. So in a chart you can have multiple trend lines. There's one more. So I'm saying which swing low to use. Okay, let's say we connect these two swing lows. Here it's yeah. So this is another trend line which is acting as resistance, and here you can see that earlier it was acting as resistance all this while, and now it breaks it and goes up, and then it starts following a different trend line. So when this was broken here, you already understood that this downtrend has come to an end. Alright? This is one more way how trend lines can help you. Okay? You're welcome, Vishal. Okay, now let's go back. You're welcome, Nageshwar. Okay, so in this session we'll talk about longs and shorts, swing highs and swing lows, and a very interesting strategy for intraday called the intraday gap strategy. Now, does everyone know what a long or a short is? Anyone who does not know what we mean by long and short? Okay, Anurag says no. Wait 1 second, I'll explain that to you. Okay, now let's say you have a swing low and then market makes a higher swing low, going like that, it finally meets a resistance, and at this price you have a shooting star. Okay, so what would you do here? Would you buy or sell? Okay, everyone says sell. Now sell, when you are selling, another word for the same thing is called a short. But now my question to you is, if you have not bought the stock, then how are you able to sell it? Where is it? When did you purchase it? How are you able to sell something which you have not bought? Daksha says only for intraday and FNO you can do it. Short sell, later we will buy it. Yes, all those things are correct, but how do we get to short, like who gives us the authority or the liquidity or the stock? How are we able to play this game? Margin, okay. Alright, let's look at the definition of short. So a short or a short position is a directional or investment strategy where the investor sells shares of borrowed stock. Okay, shares of borrowed stock in the open market. Where is he borrowing it from? From the broker. The expectation of the investor is that the price of the stock will decrease over time, at which point he will purchase the shares in the open market and return the shares to the broker which he borrowed them from. Is that clear? So what happens is, it has been, so when you want to short a particular stock, the broker has, you are borrowing it from the broker, selling it, and when it comes down, you are buying it back at a lower price, so to return the share. So the difference in between is what is your profit. That's how a short works. It's a reverse of going long, which means buying. Okay, now let's say this is a resistance. This is broken, comes back. Now here if you have a hammer, what would you do? Buy or sell? Buy. So this buying over here, the other name for this is called going long. Like short is for selling, long is for buying. Alright? Only difference between long and short is long means you are buying at the market from the market price through the broker. Short means the broker already has these shares. He's buying on your, like you're just borrowing it from the broker and returning it back to him when the price goes lower by purchasing at a lower price. That's what a short means. It's the opposite of long. Anurag, is that clear? Anita, your question is broker gives his own shares or someone else's for the time. So broker gives his own shares. He's basically not giving his own shares. It's basically like he has an understanding with the exchange that whatever shares he's allocating, those are, he has rights on those shares. So it's not really somebody else's shares. It's just, he's just connecting other people who are buying. That's what it was. So that gets a little complicated. For simplicity, just understand it's his own share, not somebody else's shares. He's connecting the buyers and sellers basically. Jignesh, your question is, does RKSV give this facility? Yes, you do get this facility, but only for intraday. You can short for intraday in the cash market, and the futures market you could short for till the expiry date. All the brokers will provide this facility. Yes, it's permitted by the exchange. Okay, so what would you do here? At this dotted line, would you go long or short? Vishal, in cash also? No, in cash you can only buy, you can do short only for intraday. Okay, now tell me guys, would you be long here or short here? Anurag, Praveen say long. Anyone who would like to go short? Dakshay long. Okay, wonderful. So you guys are getting the concept. Yes, that's right. That's a long. We take a long here. Okay, moving on. Now here, long or short? Short. Praveen says short. Yeah. Why short? What's the reason? Shooting star? Yes, exactly. So we have a shooting star, and because of the shooting star, we go ahead and short. Okay, so let's do an exercise. Okay, you all are aware of swing highs and swing lows from yesterday's session, right? Okay, so let's do a quick exercise because tomorrow onwards when we talk about the other strategies, we will be discussing swing highs and swing lows and all the example will be taken on that basis. So you need to be confident of how to identify a swing high and swing low. Okay, so I posted a link here. Now what you need to do is take this image, open it in Paint and mark all the swing highs in this example. So which means that you have to mark it starting from here. So we are looking at every swing high, even the minor ones. So I would say even this is a swing high. Okay. So I need you guys to identify all the swing highs in this chart. Okay, so you have, it's 7:48. You have 2 minutes. At 7:50, let me know once you're done. So Dakshay says you're done. How many did you find, Dakshay? $13. Oh, that's wonderful. What about the rest of you guys? Vishal says 19. Okay. Vishal, 25. Alright, so I think most of you are done now. Should we go ahead and check? Okay, this is what I've got. Have you got something similar to this? All of you? It's important that you identify all the swing highs, minor and major. There might see a few here and there you can miss, that's okay. But most of them you should be able to identify. So there's one here which I had missed. Alright. The reason I'm asking you to do this is because when we start studying the Newton's method and the edge of space tomorrow day after, we will be looking for swing highs and swing lows. So you should know how to identify this because all the trading strategies, the major ones will be on this basis. Alright, the strategies that we'll be teaching you. So do you want to discuss this? Why are we all clear why each line has been marked as a swing high and swing low? Sorry, not low, swing highs. Anyone who's not confident about this? Anurag, you say not that confident. Alright, so I'll explain this to Anurag. See how this works is a swing high is the highest point from which the market has turned its direction from up to down. So which means here price was going up, it reached this high and from there it turned downwards. Alright. So this highest point from which the market has turned its direction, I have made a arrow. So that is your swing high. Clear? So here it goes up, turns downward from here. So that's a swing high, then it makes a swing low and goes up. Now in this green candle, this high which it touched, this was the highest price. From here it turned downwards. Alright, one day you have a red candle. So that's why we mark this as a swing high which broke and price went up till we had this red candle. Alright, so this was a swing high. Same day it made a swing low and went up further. And then it made a swing high here. And you can see price coming down here. On this day it went up and then came back down. Then here it went back up and it came down and this was a swing high. So that's how I have marked all these swing highs. So these are both major and minor one. The reason being this is the daily chart. Since this is a daily chart, each candle is one day. Alright. So both minor and major are important. Is that clear? Obviously with practice you'll get better at this, but for starters you should understand what's happening here. Alright. Okay, moving on. Can you identify all the swing lows now? Okay, I posted the link. Here you need to identify swing lows. Again, so it's 7:54. We will 7:55. So we have 3 minutes. Let me know once you're done. all the swing lows, major and minor ones. Okay, Anita's got 25, Nagesh for 26, Vishal saying 30. Nice. All of you are done? Vishal 24. So is this the first one that you got? Yes, and then this is the second, this is the third, that's the fourth. Then actually this is fifth, sixth, one here. Are we in sync? Are you all with me on this? Yes, okay, great. So let's see. What about Anurag? Are you more confident now? Better than last time? Okay, that's wonderful. Okay, so I guess you've understood how to identify swing highs and swing lows, which was the main purpose of this exercise, so that tomorrow it won't be very difficult to understand the strategy that we've got to discuss. All right, so moving on. Do you have any questions, guys, on swing highs and swing lows as of now? No? Okay, so I have a question for you. Now, when you're looking for a swing low, is it important that your candle should also be bearish in color? Like it should be a red candle? Or even a bullish candle can have a swing low? Okay, you've all given the right answer. Yes. So it can have, for example, you have this candle. This candle is green in color, but it has made a swing low. So yes, keep that in mind. A lot of people get confused with this. Even a bullish candle can have a swing low because it's the lowest price that it touched. The color is not important when you're looking for a swing high or a swing low. Okay, so before we start the intraday gap trading strategy, we have a good 1 hour, so we're on time. Before we start the strategy, can you give me a quick understanding of like a rating on the for swing highs and swing lows, long and short? Praveen says 10, Anurag 8, Dakshay 10. Okay, that's lovely. Praveen and Dakshay have got it understood well. Anurag says 8. What about the rest of you? Quickly, guys.
Muted. Unmuted.
Can you hear me, guys? I got disconnected there. Okay, great, wonderful. Yeah, so Anita and Vishal Singh 8, Anita 10, Nageshwar 8, Vishal 10. Okay, yeah, so I guess we're back. All right, now you guys just need to practice the swing highs and swing lows, and let's look at a new strategy for trading intraday. All right, so how this works is very simple. First thing is to identify the current trend. All right, so which means you need to know whether the trend is up or down or sideways. All right, the first rule is identify the trend. Now for the setup goes like this. Here, like you can see, this, what is the trend here? Uptrend. Yes, exactly, this is an uptrend. So in an uptrend, if you see a candle which has a gap up opening, all right, so this candle is a gap up, but it closes bearish. So when this happens, you're supposed to take a short at the low of this candle. The reason being, price was peacefully going up and then you had a gap up, which indicated that the buyers were very confident and so much buying happened that price actually opened much higher than the previous candle where it closed. But in the course of this candles, the momentum was not so strong, and because of which the candle actually came down and closed bearish. All right, so which means this breakout which happened was a fake breakout, and now there's going to be panic selling and price will actually crash. So we try to take advantage of this failed breakout and we decide to go ahead and short. Now since this is intraday, you do this on the 1 hour time frame. All right, so this is done on the hourly time frame. Okay, the rules are very simple. Uptrend, first you look for an uptrend, then you look for a gap up candle. A gap up simply means if the previous candle has closed here, the next candle should also open here, but in this case the next candle opened here. So this in between is called the gap. All right, so this is called a gap. I'm sorry, I've not made properly. This candle closed here and the next candle opened here, so this is called the gap. So because of the gap, it should have actually gone up, but that didn't happen and it closed bearish, so we are expecting the price to fall down from here. Now you sell at the low of this candle and you put your stop loss at the high of this candle, and this is your risk because this is your entry point, this is your entry, this is your stop loss, this is your risk, and your target is risk into 2 from your entry price. So your target will be somewhere here. Alright, this is what you target, TP. Is that clear? I mean, I'll explain with examples and the chart, but are you clear with the rules? Easy to understand or any confusion? Any questions you have, you can ask me now. Anurag says y into 2. So that's because of risk to reward. We are trying to do a risk to reward of 1:2. If you are at a risk of 10 rupees, you want to make at least 20 rupees as your profit. So that's why 1:2. Okay. And this is done on the hourly time frame. So which means that you have to close your trade on the same day. Now generally we get this set up at the opening. So the first candle, the first hourly candle is when you will see this setup most of the time, unless there's a news event in the middle of the day. Most of the time it's at the opening of the day. So 9:15 to 10:15 the first candle, that particular candle, if you see a gap up and closing bearish, you have a trade. And you have to book your position or come out of the trade, whether it's in profit or loss, on the same day before 3:30 because it's an intraday strategy. Five-minute doesn't work well because the price action or the movement that happened in the 5 minute is not very, like you cannot confirm much with that. So you need a proper 1 hour of trading. Before that you can decide that, okay, buyers and sellers were fighting, but what was the outcome? 5 minutes is too less, there's too much noise. So that's why it works only on the hourly time frame. Now the accuracy of this system is 70%. You do this on the Nifty 50 stocks. Okay, so you look for Nifty 50 or any other market. Okay, so in the cash market, it's a Nifty 50. Now, anyone knows the rules for a buy? These are rules for a short. Most of the time, the short trades are the one which will give you good profits because the market falls faster than it goes up. It's the panic selling. That's what we try to target. But it also works, the reverse also works. Anita, your question is, what if gap up candle was green? So in case the gap up candle was green, then we don't have a trade. We are only trying to take a trade when we have a false breakout. If the gap up candle is green, that means it is going in the direction, so we let it go. We don't do anything. Alright, so when do we buy then? Okay, what should be the trend when you're looking for a buy trade? When you're looking for a short, the prior trend should be up. So when you're looking for a long or a buy, the prior trend should be down. Okay. And in the downtrend, you should have a candle which is opening with a gap down, but it goes ahead and closes bullish or green in color. Okay. So that would be your long setup with your stop loss here. We look for both of this examples for both these setups. Okay, so here you can see this is Axis Bank hourly. Price was in an uptrend, alright, it was going up. Here you had a gap. So what should we do here? Should we buy, should we sell, or should we stay out? As per the rules that we have learned just now of this system only, not as per your technical analysis, as per what we just discussed. Does this trade setup match our criteria of buy or sell or staying out? Anita says buy, Anurag says stay out, Praveen buy, Dakshay buy, Nageshwar wait, Vishal stay out. Okay, so those of you who said stay out are right, because here this was an uptrend, but the candle which gapped up was green, so that's not our trade. We don't do anything. It goes up further, and this particular candle which gaps up is red, so this is our trade. We short here. Okay, when do we short? Last 5 minutes of the candle or the next candle when the price approaches there. So last 5 minutes, if you see that candle is at the low, you can short, or you short in the next candle at the minute the low is broken. Okay, is the example clear? Have you all understood why we are not shorting in this candle but we are shorting this candle? Is that clear to everyone? All the ones who said buy? Yeah, the last 5 minute thing, what I'm saying is, so this is the hourly candle, alright? This candle is being formed. So let's say it starts at 9:15, till 10:15 it would be forming. It'll close only at 10:15. So maybe at 10:10 you would know the shape of the candle, the color of the candle, alright? So you could take a trade either at 10:10 if it is already at the low, or let it close and then when price breaks low you can take the trade. But last 5 minutes generally we get the trade by that time, because it doesn't really change its color after 55 minutes of trading. Are you clear why I'm saying last 5 minutes? Because, you know, let's say this candle closes bearish and then next candle can be a gap down. I mean, that doesn't happen all the time, but sometimes. Or it could be a big crash. So you don't want to miss on that. So you try to enter in the last 5 minutes. Okay. Alright, this is another example. You can see it's a clear uptrend. And then you have this red candle, alright, which gaps up. But it closes bearish. So we short here. Here is our stop loss. Jignesh says, can we use two 30 minutes candles? Okay, that's a good question. We generally stick to only one hourly candle. We don't break it down because it can get a little confusing. So just stick to the 1 hourly time frame. That's what we've been taught and that's what we've been practicing. But it's a good query. Okay, guys, and another thing is, whenever you're learning a system, you have to follow the rules. Alright, you cannot tweak the rules. Probably later, if you're experienced and you've understood the system well, you could tweak the rules of exit, you know, your target. Instead of 1:2, you could make it a little different. But that is with practice or once you are confident of a particular system. Initially, once you're just starting off, you should be taking a system, doing paper trading on it, and understand how well it works. Once you are confident on it, you put live money onto it, but follow it as it is initially. Then later you can also fine tune it. Okay, Anurag says in last 5 minutes was seen that we should have shortened the previous candle. I didn't get you, Anurag. So here in last 5 minutes price has actually gone up. Okay, so when you see a rejection over here, you don't short. You wait for the price to come back to a low and then you short. So in this case, it would be, so after the last 5 minutes, up till it reaches a low, anytime in between that you can short. Did I answer your question? Okay. Okay, so you also have this on a daily chart. We generally don't do this on daily because it's an intraday gap. Just for an example, I've taken a setup, which is this one. After an uptrend, you see a gap up but closing bearish, right? So we don't look for trades on a daily chart. This is just to make you understand how this works. So trading, it's a intraday strategy only. So you only use it on intraday. Okay, so do you want to see some examples from the live market? Can we use it at 2 p.m.? You can, Jignesh, but the thing is, the gap should have happened at 2 p.m. the candle. Then you can, so this has to be done immediately after the candle has gapped up and then closing bearish. Because if you wait, the price movement would have already happened. And even if you do it at 2 p.m., you have to still get out at 3:30. So you don't hold on to the trade for the next day. Not with this strategy. We will look at other strategies which you can use for overnight trades. But this one is just intraday. Okay, let me show you live examples. On the terminal. Okay, Nageshwar says, I'm looking for overnight trades. Anurag says, intraday risky. It's not risky as long as you're following the rules, then it's okay. But randomly trading intraday or any market, any time frame is actually risky. But trading with a set of rules which have been tried and tested is not risky. And Nageshwar says, I'm looking for overnight trades. So overnight trades, not with this strategy, Nageshwar, but you would be learning a system tomorrow for options and another one day after. Both you can be used, which can be used for overnight. Okay, let's look at okay, Praveen says, can you open Vedanta chart? Sure, let's start with Vedanta then. Okay, Praveen, so do you see a particular pattern here? Perfect, exactly. We have a bearish engulfing after an uptrend. So what we should be doing is we should short this for now. For now it's a short. And let's look at, did it have a intraday trade? No, it was a regular opening. Okay, guys, can you identify a setup? I can see one setup here on this chart. Can you help me identify the setup as per the intraday gap strategy that we discussed? Have you found the setup? the trade. Actually, I generally don't use a day separator, but okay, Vishal says 1st of December. Yes, exactly. So this is the one. Yeah. Is that clear to everyone why this is a trade? You can see that this is an uptrend, and what happens in an uptrend. So this particular candle, it opens here. Okay, so that's a gap up, but it closes bearish, and we short here. Alright, so that's how you look for these kind of setups. Vishal says, but target not get on that day, right? Let's see. So this was 1st of December, 9:15. Okay, and this was 2nd of December. So we actually had to close our trade. We sold here at 227.95 and we came out at 226. Yeah, so I don't think it hit our, so stop loss was bigger, 233 and 227. Yeah, so here you don't make your 1:2 because the price moves on forward the next day. But as per intraday gap strategy, you're supposed to exit the same day. Good observation, Vishal. You're welcome. Let's look at more examples. Okay. Can you identify the setup? Anurag wants to see some long examples. Okay, sure. We'll do that. After this example, we'll look for a long one. Can you identify the setup? 13, yeah. Exactly. That's a great setup. And here again, if we don't hit the stop loss same day, the target the same day, so it's like a small profit trade. Anurag says 29th. 29th, okay. Anurag, are you talking about this one? Yeah, exactly. That's a good setup. So here we hit it the same day. It's a good one. Okay, let's try and look for a long setup. Okay, can you help me identify the long setup? Vishal wants to check Nifty. Sure, we'll do that after this one. 25th. Yeah, are you talking about this one, Anita? Yes, exactly. Yeah, so that's the right setup. And here it hits the, okay, it doesn't go twice the same day. You make some profit. Okay. You guys want to check Nifty, right? Okay, so we have one here. Anurag says, can you talk something more about timing as in how we can capture the lowest point of that hour? Alright, Anurag, so how this works is when you see how the candle is closing at 5 minutes before the candle closes. If you see the candle like this, okay, which is bearish, you wait for the price to come back to its low, alright, and in this particular candle is when you're shorting. But in a case where the candle is actually like this without a spike, here you know that, I mean, it's not, or let's say it's got a very small spike, alright. So here you can just take the trade then and there itself. You don't have to wait for the candle to close because only a few minutes are remaining. So it's a little subjective, but the idea is in the last 5 minutes you will understand whether the candle is closing red or green, and on that basis, on how much of a spike does it have, you can start targeting your trade. But in the first half an hour, if the candle is red, there is a possibility that after 10 minutes it can become green. So that's why we always wait for the last few minutes of the hourly candle to close before we are sure about the color of the candle. Alright, is that clear, Anurag? Let me see if we have more trades. Okay, so would we take a trade here in this candle? Yes or no? No, and the reason? Uptrend, okay, and that's right, it's an uptrend. And what else? Okay, Dakshay says previous candle red. Yeah, exactly. So the point is, in a downtrend, this candle should have been green. It doesn't match both the criteria. So it doesn't match our criteria, so we don't take this setup. Let's see what else. Okay, what would you do in this candle? If you want, I'll zoom out a little bit. You'll go long, okay. You all say buy. Alright. So now you are right, but there is a certain, okay, 1 second. Okay, there is a certain exception over here. Exception being that when you have a candle like this, okay, which is such a big candle, so what happens to your stop loss? You should remember that you're doing intraday. Alright. Since you're doing intraday, your stop loss is here. Okay, your entry is here. So if you have such a big candle, try to not take the trade. The reason being that you will not cover one. Do you think it is possible to do 1:2 of this on the same day? Yeah, that's right. It's difficult. So on such big candle, this generally happens when you have some very big fundamental event, maybe like Trump election or some major news in the market, worldwide news like the pound, some demonetization, something. So you generally avoid such kind of moves, all right? Because here you have to always keep in mind your risk to reward should be in place. So here that doesn't make sense. Risk is too much, reward is too less. Okay, now I can see a trade here. The Akshay says pound up 3%, so tomorrow maybe Brexit for sure. Yeah. Oh, you guys also follow currencies? Even I trade, actually I'm a forex trader. I trade currencies professionally. That's good, that's good. Yeah, I just booked my trades in the currency market. Alright. So, yeah, dollar is going down. That's what I've noticed. So do you think it's a correction or a change of trend? In the meantime, guys, can you help me identify a setup here? Is this a decent setup? And what about this one? So this is 1 and this is 2. Okay, so what do you guys think of 1 and what do you guys think of 2? Two, okay. What about 2? 2 is good? Yeah, 2 is good. And 1? 2 is perfect, yes. 1 is an exception, okay. Yeah, big candle. Yeah, generally not take such trades. It's a little big. Risk to reward doesn't seem right. Anita says 13th. Let's see 13th. Are you talking about this one? Next one. This is a gap down and a bearish close. So this is no trade. Yeah, so here we don't have a trade because this should have closed as a bullish candle, but it closed as a bearish candle. If this same candle had closed bullish, we would have a trade. Okay, all right. Okay, I missed somebody's question on top. Okay, Anurag says, it is out of the course question. Should we look into the fundamentals of the company while technical analysis? Okay, so you can, but generally I would avoid, I would ask you to not do that because, the fundamentals of company are a lot, starting from dividends to what the management is doing, the earnings per share, it's too much. So, and plus all that information is already absorbed in the price. Unless you're looking at a long-term investing point of view, you should not be looking at fundamentals, especially not for the intraday gap strategy. Right? It'll only confuse you and your results will be, your performance will not be there. So I would say if you want to make money, just stick to a simple system. That's more than enough to make money. You should be looking at fundamental analysis when you are trying to make an investment, which means if you plan to invest in a company and hold on for a couple of years, then it makes sense. But the trading that we do, exiting on the same week, it's not required. I mean, my suggestion is that fundamental analysis is not required. Okay, all right. Okay, let's look at some other stock. Okay, what do you think of this one? Okay, Dakshay says Bank Nifty, Anita says Axis Bank. Alright, we'll check both. We have some time. What do you think of this one? Yes or no? No big candle? Yeah, exactly. So that's a no. Yes, that's right. You should be avoiding that. Okay, what about this one? The green one. Will do. Okay. Vishal says no. Why Vishal? Why would you not take this? Dakshay said yes. Anita says shooting. Okay. Alright. So I guess you guys are still confused because some are saying yes, some are saying Nageshwar says yes. Vishal says because bullish candle. Okay. Dakshay says no shooting, it's not. Okay, so shooting star is a different concept. Let's go back and check the rules. Guys, look at the rules. First rule, uptrend. Second rule, gap up. Third rule, it should open and the close should be bearish. Alright. So now going back. Okay, I forgot where the candle is. Yeah. Okay, so here you have an uptrend, alright? That is fine. After the uptrend, you have a candle which is gapping up. But is it closing bearish or is it closing bullish? It's closing bullish. But as per our rules, what should be the close be? The closing should be bearish or bullish? As per the rules. Bearish, exactly. So we don't have this trade because the candle is not red in color. So after an uptrend, you look for a candle which opens, gaps up, but it closes red. Okay, bearish candle, uptrend and bearish candle, downtrend and bullish candle. So you have to keep that in mind. Okay, now you wanted one of you wanted to check Bank Nifty and somebody said Axis Bank, so we'll check both. Okay, this is, oh Anurag, I missed you said on 11th, is it a short? Okay, I'll go back and check. On 11th. Are you talking about here, this candle? Sorry. Are you talking about this? Yeah, okay. So, no, this is not a short because there's no gap. So this candle closed here, the next candle opened here. So there's no gap here. So this is not a short. This red candle, the candle is red, but it should have opened higher and then it should have closed bearish. So that's why we don't have a gap here. That's why no, we don't have trade here. Okay. And Daksha says 30th of December we have a buy. Let's see. 30th of December, I don't see a gap. Everything else is fine. Trend is down. But which is the candle which is doing a gap down and then closing bullish? So here we don't have a trade, 30th of December. Next one. This candle is doing a gap up and then closing bullish again. So that's not the trade. See, when you're looking for a gap up, it should be a downtrend and then a gap down but closing bullish. Okay. Here it's a little different. It has gapped up, not gapped down. So that's why we don't have this as a trade. Okay. Okay. Anurag says, no, Vishal, okay, I'm a little confused. Vishal says 10th of Jan and Anurag says 6th. Okay. Let me check. 10th of Jan. Yeah. So here we have a trade. Yeah, that's right. Because this is a downtrend and then we have the candle which is gapping down but closing bullish. So that's a good trade. Yeah, that's a trade. That's right. Okay, and Anurag says 6th. 6th is this candle. So that's not a trade. The reason being this should have been bearish. Okay. But I guess you guys are getting more confident now. You're identifying more setups. I'm happy about that. With a little bit of practice, you'll get much better. Okay, let's do Axis Bank. Or did we do Bank Nifty earlier? Okay, let's do Bank Nifty and then do Axis Bank. So, what do you think of this candle? Yes or no? Oh, this is Nifty 50. I'm so sorry. I forgot. I made a mistake. Okay, so I'll open Bank Nifty. That's right. That's not a trade because you want to avoid these kind of candles. Okay, thanks for pointing it out, Dakshay. Okay, here we go. Anurag says, can you talk something about currency trading? Is the analysis the same way? So, I've been trading currency for last 8 years. I can talk a lot on currency trading, but the problem is that that's not part of the syllabus. You could send me an email separately and we could chat about it. My email ID is rahul@tradeacademy.in. Alright, and so we could discuss that offline, Anurag. But to answer your question about analysis, it's the same thing. Even there I use the same analysis. Not this strategy, but the strategy that you are going to learn day after tomorrow. That's what we use on the currency market as well. On session 4, so that's on Thursday, the strategy I'll teach you, that's what we discuss. That is what I use for the currency market. So that's a versatile strategy called the Newton's method, and on the Newton method can be used for currencies, commodities, equities, you name it, all the market indexes, everywhere. Okay, so there are some questions posted here. Daksha says, after this session, few minutes, can we discuss it for 5 minutes here? Well, the thing is, there's not much you can discuss here about international forex because you're not allowed to do it from India. I do it because I have my clients offshore. So with offshore clients, I do it. But for Indian customers, you're not allowed. You can only do what do you say? Futures. You can do futures. Okay, if you have an international account, then it's wonderful. Then you could do it, but only for NRIs or offshore account. That's great. All right. So guys, about forex, you could mail me on my ID. It will be easier because the rest of you guys are not, comfortable with this. So I have a strict syllabus to follow. My ID is rahul@tradeacademy.in. I would post it here. Okay. All right. Now, can I answer any questions about the intraday gap strategy? Anita, I missed your question earlier. You said, can we trade at 3:20 p.m. with 15 times margin for overnight next day to cover it in Upstox account? I don't think so. Not overnight. Intraday is what you allowed, not overnight. Okay, what do you think of this trade? Does it match all the criteria? No, and why not? Okay, Anita says bearish engulfing. So, yeah, but the intraday gap strategy is a little different, Anita. Like, we don't look for the candlestick pattern here. We only look for uptrend, gap up, and bearish close. That's it. So on that basis, do you think that this trade would match the criteria? Right? Okay. If you say no gap, see, guys, the thing is, this candle is opening here. I know the gap is difficult to spot, but It opens here, closes here. Next candle closes here, and then then the candle opens here. So that's the gap. So it's an uptrend, and then you have a gap up with a bearish close. So that's why that trade makes sense. Okay. Jignesh, your question is how many charts? Yeah, you can open 4 charts at a time, but you need to keep an eye out for Nifty 50 stocks. So that's 50 stocks. But the minute the market opens, you'll know how many of them have. Like you can just spend one minute on everything, basically 30 seconds to see is there a gap up in any stock. And only the one which you have a gap up, you have to see at the end of the first hour whether they are closing opposite or not. And then you have the trade. But the first 1 hour of the day is crucial. It's important for you to identify the setup then. Okay, so should we look for trades here or should we go to Axis Bank? Okay, this one is a little tricky. So what do you guys think of this? Yes or no? Okay, Vishal says no, but the other Vishal says yes. So can you give me your reasons why yes and why no? Because it's a tricky one. We could discuss the reasons. Anita says no uptrend. Okay. Good reason. Vishal says it's a downtrend. Okay. Okay. Now let me zoom out and then see the trend. So here we have a downtrend and here we have an uptrend. Alright, so ideally the definition of an uptrend is, what's the definition of an uptrend? Higher swing low. Okay, so this is a low, then the next swing low is here, then you have the swing low here, then the swing low here, and then it was here. So in this case, we don't have a clear uptrend. So otherwise the trade looks really good. See, it's a gap up with a proper shooting star formation, but it doesn't match our rules. So that's why we avoid it. But it is a good setup. But those of you who said no, that's right, because the reason being there's no clear uptrend. Yes, Anita, you're right. There is no clear uptrend, so that's why we don't have a trade. But if the same thing were to happen after a clear uptrend, that would be a very nice setup. Okay, I would request all of you to go through this video again before you come for the session tomorrow, so it would be helpful and we could clear more doubts for all of you. Okay, so we have a setup here. Then we have downtrend, gap down and close bearish. So We don't have a setup here, no, but this is correct. Okay, here we have a setup, but big candle, so we avoid it. Okay, now I need you guys to answer this. Is this a trade as per the intraday gap strategy? Yes or no? Anita says no, Dakshay says no, Vishal says no. Okay, I'm happy. Good. You've identified it. No, that's right. That this is not a trade. The reason being, what's the reason? Red candle. Yes, thank you, Dakshay. That's right. No downtrend. Okay, so downtrend, see, this is a swing high and then you have a lower swing high. So downtrend is fine, but the candle is red in color. You want a green candle here. Okay. And if you are confused about the trend, you could always zoom out. See, when you zoom out also you can see it's a clear downtrend. Okay. So zoom out will help, but the candle is not green, so you don't have a trade. Okay. Or mountain chart, yeah, mountain chart would also help. I mean, I'm not very good at mountain chart, so I don't use it, but yes, it would help. We just stick to candlesticks. Okay, what about here? Do we have a trend? Let's see. Okay, we have a swing low, then a higher swing low, then higher. So this is actually an uptrend, a minor one, but it's an uptrend. So this is the right setup. This is perfect. Okay. Is that clear to everyone why this is a good trade? Okay. So here, if you zoom out and see, it's a downtrend, and then you have a candle with gaps up. Sorry, it's an uptrend, and you have a candle with gaps up, but it closes bearish, so that's why we have a trade. And yes, target was hit on the same day. Perfect. So these are the kind of trades that you want to look for in this strategy. Alright guys, can you quickly give me a rating on a scale of 1 to 10 of your understanding of the intraday gap strategy? Anurag 9, Vishal 10, Jignesh 10, Praveen 10, Dakshay 8 to 9. Okay. Anita's 10, that's wonderful. Amazing. Vishal Singh is 9. Okay. Some of you have been very quiet, so I request all of you to put in your rating. Jignesh says, excellent presentation. Thank you so much, Jignesh. Samir has been very quiet. Praveen replied. Okay. What else? Okay, rest of you have been talking. Nageshwar says 6. Alright, Nageshwar, in that case, we need to practice more. Guys, homework, you need to find only one setup of this intraday gap strategy, one long and one short on the hourly time frame. You can go back in the past, look for past setups, or you could look for the ones if something is being generated right now. So that's your homework. I need this by tomorrow. You have to email this to me at my ID which I mentioned earlier. Jignesh says, can we have auto search? I'm sorry, Jignesh, but that's not possible. Not yet. Vishal says 17th of August. Let's see. 17th. This is 12th, 13th, 14th, 17th. Yes, wonderful. That's a good setup, Vishal. Very nice. Yeah, that matches our criteria. So it's a good setup. Okay, are you all clear with the homework? Can I expect two setups? You need to give me a screenshot, mark the entry, and should be from the Nifty 50 hourly time frame. That's it. Simple rules. Before 6 o'clock tomorrow. Jignesh says instead of straining eyes, we cannot use RSI or MACD. So we don't use any indicators at Trade Academy because indicators are lagging. So there may be methods of that, but this particular system and the one that you learn tomorrow and day after would be without any indicators. So I'm not saying it doesn't work. I'm just saying that we don't use them because they are lagging. Okay. Vishal says on Nifty 50. Yeah, on Nifty 50. So you need to look for trades on the hourly time frame for the Nifty 50 stocks. The stocks will constitute Nifty 50. Okay. All right. And tomorrow we'll talk about options and we'll discuss a very powerful strategy for trading the options. Then day after we'll talk about the Newton's method, which is a fake breakout strategy, which is quite versatile. And then we look for live examples on Friday. All right. So thank you for being a good audience and being really patient with me. Catch up with you guys tomorrow. Daksha has a question. So now what do you think as per dollar index closing, how Bank Nifty will open and trade? Dollar index. Well, I feel that dollar index is still, it's been going down, but I think it's kind of forming its support and it should bounce up very soon. Probably waiting for Trump's speech, which is I think scheduled tomorrow, and then we'll have some reaction. So till then, market should be sideways. Gap up, not sure. When is the speech? Oh, I think it's on 20th. So probably after that is when we'll see some big movement. By Friday, we'll have a clear picture of dollar. Maybe dollar should start going up. All right, Nageshwar, you're welcome. Anita, you're welcome. Vishal Singh, you're welcome. Thank you for being a good audience. All right, guys, good night. See you tomorrow. Take care. Good night, Vishal. Jignesh, good night. Bye, Dakshay. Thank you, Anurag. Good night.